All right, welcome back, everybody. Thank you for joining us one more time. Today, I'm honored to have Mr. Frank Holmes and Aydin Kilic on the call. Guys are decision makers at Hive. You've come across their names, no doubt, before. Hello, Frank. Hello, Aydin. How are you?
Great to be with you.
Thanks for having us.
All right, thanks again. Thanks again for joining. Before we get started, we are at block height 825502. Our 30-day hash rate is at 523.7 exahashes, and the hash price currently at 83.95. Thanks again for joining me, guys. I mean, people have come across your names probably, but I don't know how often you've been asked about your background and how you got started in the space. Maybe Frank, you give us a 30-minute background about how you fell into this Bitcoin.
Well, I was mentioning earlier that 2017, I was trying to launch an ETF, and it just finally came out this week. It's taken a long time. So with that, in that journey, when you're a Bitcoin miner, you mine a Genesis coin, a virgin coin, so you don't have an AML or KYC concern that's delayed this whole process for an ETF finally getting launched. So I would create it as a co-founder, Hive. And Hive became the first crypto mining company, and it became a proxy for a lot of gold investors who were reluctant to go to an exchange to go buy Bitcoin or Ethereum or any of these other coins. So Hive became the proxy, and it was a raving success. We raised 35 million. I put up the first 5. After that, I went public. Fidelity came in for 100 million, other institutions, and we built out in Iceland, in Sweden. And then after the last halving, we went and purchased assets in Canada.
Where was the first mine that you guys started?
Iceland. And that's a great question because we've always been focused on geothermal or hydro because it's green. We talk about our coins are green and clean, and that's been a very important part of the strategy that we have. We also run it very efficiently. Anthony Powers ranked us the most efficient, which Aydin's done a phenomenal job as a miner. But we've also were the first to mine Ethereum at an epic scale. We had over 120,000 GPU chips mining. So we have a certain expertise in the use of GPU chips to do mining with. And that's why 2 years ago, we bought all these NVIDIA chips that allowed us to mine Ethereum, get our money back, and then we pivoted now going to HPC. So we've always had these sort of two operations, but we have tremendous expertise in the GPU in addition to the ASIC mining business.
All right. And you, how about you, Aydin? How did you get started?
In crypto. I started investing, and I started setting up a mine locally with some friends many years ago. I live in Vancouver, Canada. And I founded a company. I was inspired by Hive, actually, because Hive was the first public crypto miner. So I founded a company called Fortress Blockchain. It's called Cathedral Bitcoin today. Back then, I raised $20 million, took it public, ran as CEO for a few years. And Frank and I had both been running public companies through the bear market in 2020 and the halving, and a lot of regulatory headwinds that, we like. All the big crypto miners, the first ones came from Canada, right? And so we had to deal with issues with Canadian Public Accountancy Board. So you sort of learn to navigate the technical challenges on the crypto hash rate economics, right? But then also policy and regulatory, right? And so it's a unique overlapping skill set. And so, Frank had a vision. He did 2 amazing acquisitions in the last bear market of Lachute and New Brunswick, and I sort of joined Hive with the advent of the New Brunswick acquisition. And so since then, there's been no looking back. We've just been sprinting, and I think it's worth noting that we're all about best ROIC, right? Best cash flow return on invested capital. We haven't scaled just for the sake of scaling. I know that it's very trendy just to have like a huge exahash target, but we'll talk about it more in the interview, but that comes with pros and cons. And we've got the halving coming up in a few months, right? So not a lot of the crypto miners today, some, but not a lot, have been through a halving event before. And the bigger you are, the harder you may fall.
Absolutely. I mean, going through the bear market successfully is already a badge of honor, kind of, in this crazy volatility market that we find ourselves in. I already have so many questions.
Yeah,
When
I
did you
saw them.
guys
Look at them.
diversify?
A lot of
When did you?
questions. You're very thorough.
Yeah. When did you guys start diversifying from Iceland, Frank? What was the first next country that you went to
What
after?
we started was in September of 2017. We went public, and we immediately had, I think, at the time, 5 employees and doing 36 million in revenue. So we were immediately very profitable business as we went public, and then we started to scale in size and build out in Sweden, 100 kilometers south of the Arctic Circle. And then we went after the halving into Canada, in Quebec, and along the border of Maine, in the province of New Brunswick. But once again, it's predominantly hydroelectricity that we've used.
Interesting. What has been new in 2023? What were your highlights? Just as we sort of wave final goodbyes now on the 12th.
The difficulty increased 100%, and Aydin and the team were able to maintain buying more efficient machines, reconfiguring things. We were the first to have our own chip with Intel, the Buzz Miner. And so we were able to get a bunch of those machines delivered, installed. So therefore, with this inflation of 100% in the ecosystem, we were able to maintain 1% of our position in the network. But we've been very conscientious about dilution. So when you look at it as a public miner, we had the least amount of dilution last year compared to our peers. Other people just issue shares, 300%, 200% of their shares float. Doesn't matter, just get equipment. And I think that was probably a good move that they did, but we're more disciplined, like Aydin just shared with you. We're focused on what's going to give us a sustainable high cash flow return on invested capital.
Why? Okay. I mean, there's so many big miners now, right? Some of them say, "Oh, we got the most hash rate." Some of them say we are the most efficient. Some of them say that they're the best on cash flow. Why did you choose that metric specifically? And maybe going into this year with the halving in mind and the ETF coming and all the other sort of bullish news that might increase hash price over the short term before difficulty adjustment can catch up. What are you guys focused on then? Does that change anything in your mind?
I think it's a combination of the vision I had from the beginning that this is like a gold royalty business, which has high revenue per employee, high cash flow returns on invested capital. I am also the CEO of a investment company. I'm an institutional money manager. And so when you're in that end of the business, you're really consumed on getting the highest cash flow returns on invested capital. Aydin and the team, they've embraced that vision. The board is very focused on that. And they're the metrics that we've sort of gone through. And when we went through the last halving, we were the biggest miners of Ethereum. Guess what? The margins in Ethereum were so big, they buffered us right through that halving. Because if you recall, before the difficulty fell, the price halved. You have your liquidity, but we're still making money mining Ethereum. And then Bitcoin took off, and then all of a sudden margins start to come back. So when you're a Bitcoin miner, you have much greater volatility in your profit margin because you have two forces against you. One is the price of the coin, and two is this inflationary creep of 5% a month compounded, which works out to close to 100% a year. So those two things you have to try to navigate through. Ethereum was much more stable until it went to proof of stake. What we have now is our expertise is HPC AI. And I'm so thrilled what Aydin's been able to do with the team. We had a vision this time last year of $250,000 a quarter we'd be making from this vision. And then it would get $250,000 a month, and then $250,000 a week, and then $250,000 a day. Well, we've got to $250,000 a month. And now we're more than $250,000 a month. So that build out of converting our NVIDIA chips, which are right now mining altcoins and converting to Bitcoin, as you go and convert into HPC business, it's very challenging. It's very technically driven, but we have a great team that understand GPU mining. Much more.
So on a technical on it, sorry, Frank, just because it fits here. On the technical level, Aydin, what is the difficulty of making all that Ethereum mining investment work now for HPC? And how much lead time did you guys have when it came to the proof of stake decision, which essentially, what prevents you guys from having the same dynamic play out with the HPC where you have so much investment and
Well,
then there's, changes that you cannot control that change everything?
first of all, ASIC mining is like buying a Ford 150 truck. And Ethereum mining with GPUs is like driving a Porsche. A big difference. And the technicians, the people driving, the handling, everything is another level. And it's much more simple for us to all of a sudden embrace the ability to go do HPC, high performance computing. There are other differences on energy, but I think that vision for us was pretty seamless. Our peers bought some GPU miners from NVIDIA to only mine Ethereum. We went and paid more money for our chips so that when Ethereum proof of stake, whenever it was going to happen, we didn't know. But when it would happen, we could pivot to the HPC. So we started building out our website. We started investing in learning about the HPC market very early before the switchover. And then we're blessed. AI booms. OpenChat GPT is just a game changer. And now we're running so hard to build that out because it's very stable, high margin business that I think will also help us buffer through the halving.
Where are we, Aydin, on the technical side? What do you think for these GPUs? Do we see the same thing happening, that at some point we will like move to more specialized machines that can just do AI in some form, just like ASICs can only do SHA-256?
I mean, really everything, if you want to just boil it down to, the outlook when you want to run a business and having the best tech stack, it just comes down to the best dollar per kilowatt hour revenue for the lowest capex, right? Yeah. So for example, like earlier on, I think in the intro, we talked about how Hive's all about the best ROIC. Okay. So I'm going to give you an example. When the S19 XP first came out, the prices were egregious. I think they wanted like 34, maybe even $40 a terahash. Like, it was like, who's buying this, right? And you've seen like ASIC hardware commodifies, and we know this very well. As Frank mentioned, we built 11,000 buzz miners with Intel block scale. And why did we pursue that at that time? Because it had the price when we inked that deal was approximately half the dollar per terahash of prevailing market. And so it gave us a hedge, so we didn't have to be so reliant on the big three producers. Now, you're asking me about Ethereum and GPUs and all this stuff. It's the same thing. I mean, don't get me wrong. The execution, the tactics are more complicated. That's what Frank was alluding to. A Porsche versus a mechanic that could work on a Porsche versus a mechanic that could tune up a F-150, right? And so our teams globally are extremely well versed in GPUs. But just to put some specificity on it, back in the ETH mining era, 2022, I was actually just reflecting on this with Johanna. Her and I were in Dubai at a conference, and we were going over these numbers for Frank. And back then, our NVIDIA GPUs were doing 90 cents a kilowatt hour revenue, right? Our AMDs, which were half as efficient, we're still doing about 45 cents a kilowatt hour. And keep in mind, this is still running out of a crypto mining facility. So what's your all-in cost? A nickel. So your profit margins are 95%. Okay. At that same time, crypto was pretty good, right? Bitcoin was pretty good. I think, ASICs were maybe doing 20, 30 cents a kilowatt hour. Like it was a strong market. And you would just see that Ethereum was 3-4 times the revenue. And then when you look at the profit, it was even much higher. Now, ETH, the GPUs had a slightly higher capex, but the profit margin per kilowatt hour was so much higher. So it allowed us to kind of leapfrog in terms of the capital, right? And when we have a disciplined capital structure, and we're not just like raising money, because when you raise money, it becomes difficult for people to track, okay, have they even made back the money on the last batch? Because I'll ask you this. If you wanted to get into mining and you spent $20 million on ASICs and you ran them for 3.5 years and they became obsolete and you made back $17 million, but your cost was 20, was that a good deal?
Depends on inflation.
No,
Yeah,
no,
but yeah, I
yeah.
understand
I
what you
mean, notwithstanding all these, macroeconomic, things, and well, no, it depends on. I mean, you get back less than you put. My point is, we want to. If we invest $20 million, we want to earn way more than $20 million. Otherwise, we just buy the
yeah.
Bitcoin. Why do
No,
why
I should
run
have said it
around,
depends on deflation.
running all this stuff,
Yeah,
So the merge.
I think, Jesse, to help you right now, we're mining Bitcoin today. Our best chips are 15 cents an hour. Aydin?
Yeah, like just the entire network is between 10 to 15 cents an hour. Yeah, 15 might even be a little bit on the high side.
And
Because Bitcoin dropped to
with the
43
NVIDIA
today,
chip?
as you guys probably saw, which is yeah. XPs and K pros are doing about 14 cents a kilowatt hour, even with Bitcoin.
the question I guess then that I have is how much when you have profit margins that are so high. Sorry, Frank. Yeah,
I'm
go
going
ahead.
to help you, Jess. So our NVIDIA chips are doing an HPC $1 an hour. So would you rather
I understand
15
that.
cents versus $1?
It's
That's the big difference.
it's a massive boom, right? Absolutely. I see though that the same thing might happen as with the hash rate, right? The more supply that comes online, the lower the profit margins will be, and it just will help Bitcoin, decentralize even more and be pushed to the energy system, to the fringes even more, because you need to secure ever more cheaper power. The question I have for you though is if the profit margins are so high, how do you think about longevity, right? Because you've bought, I wrote it down, 10,000 S19K Pros and 7,000
Yeah.
S21s, right? So those purchases tell me, that you are still heavily betting on Bitcoin, even though the profit margins are much
We're
higher
not
elsewhere.
abandoning
And so
Bitcoin.
the question is, look, for how long do you project those profit margins to be?
It's two different business cases, right? So basically, having them both allows us to have an advantage. So, for example, when Bitcoin goes on a rally, it's the best thing, right? You're making massive. You can get sub 1 year ROI on your ASICs if you bought them in a bear market and they're operating and plugging in, right? And you've got your net dipped in the river of gold when the Bitcoin rally comes. Great. It's a great business, right? We believe Bitcoin is an energy-backed, decentralized digital asset, and it's the best one. But the GPU it's different because it's steady, right? So I think you're asking, well, how long is it going to stay high margin? There's still GPUs that are being rented. Some people are even still renting V100s, which came out like 6 years ago, longer. So I think that the economic life cycle for GPUs is more of like a 6 to 7 year horizon, right? And it's a much slower melting ice cube, right? So for example, H100s rent for $4.50 an hour, right? Per GPU, right? But they're closer to 1 kilowatt. So that's $4.50 a kilowatt hour, right?
That's
And
crazy.
and the A100 now is whatever, $1.80, $2, right? But the A100 when it first came out was, higher. So yeah, as a new model of NVIDIA comes out, right? More VRAM, whatever, better tensor cores, that will secure that top spot. People are going to say, okay, well, now I want to pay $4.50 for. It's just like a Porsche. Like, so is like do people still drive 996? I don't know if you're a car guy, right? Maybe some of your
Not really.
viewers are, right?
But
So
yeah, I
people,
understand what you
Porsche
mean.
993 is still very desirable. It's a 20-year-old car, right?
Good old German
And so
engineering.
is it as fast as the new 992? No, but still very desirable, right? And so you have, whereas ASICs, it's just as soon as you clip below your break even price, then you're going to sell them to South America, hopefully, right? And then it goes down that food chain. So it's just like a different ecosystem, but you can
Yeah.
make
Just to go to
all
the
of it.
very very basic. So what keeps you from if you What keeps you from doing all AI or all ASICs? I guess that's what the question boils down to. What is the current makeup, and what keeps you from saying, hey, if this is a melting ice cube that produces way more money, why don't we just sell all the
They're both
ASICs and
melting
do
ice
the
cubes,
AI?
but they have different like ASICs are quicker melting ice cubes, right? Like ASICs usually 3 to 4 years
Yeah.
people replace them, right? Or sell them down the food chain. And so
Hmm.
it's two different things. Like we're entrepreneurs, right? So we want to create two things. Just because if we grow one flower and we plant more seeds and we grow another flower, we don't go kill the other one. Go, all right, that's it. It's over. No, we have both. Now we have more flowers, right? So we're.
I guess what I'm look to use your angle. If you have a greenhouse, right, and you make way more money selling tomatoes than you make cucumbers, why would you not go all tomatoes? Is what I'm asking.
That's a good question, and I'm trying to help you with that. Is the similarity between both is data centers. Both you need data centers. Now, the data center you need for ASIC mining in Texas, it's less than 500,000 a megawatt. When you want to go in HPC, 10 million a megawatt. Bigger
Hmm.
capex. Another reason, you can balance the grid like we do. We're the first to ever balance the grid in Sweden, and and that means you're not going to have 100% of the uptime. If you're an HPC, you have to be up 99.9. So there are differences in both of those plants. And there are times that when Bitcoin runs, the margin expands substantially. And we're making a big bet that Bitcoin's going to trade much higher. That's why we're hodling.
Mhm.
And we also have been offered more to buy our green Bitcoin. We know that the fact that it's a green comes from a green energy and there's less. And then we had this validated last year with Satoshis. A lot of people just didn't get the idea that ordinals using a Satoshi, that a Satoshi at a very important inflection point, like the day the ETF first started trading and $7 billion traded. Well, those 900 coins mined on that day are going to be more valuable than the coins mined today because it
We
was
could probably have a whole episode
so,
just battling over ordinals and our different viewpoints.
and
But
we got offered
yeah.
for something that's worth 0.001 of a penny because one Bitcoin's 100 million Satoshis. We got offered $250,000 for only a handful. Well, why is that? Well, because someone has this picture of their daughter being born and they have a Satoshi that was at the same time. That Satoshi's all of a sudden worth $25.
To them, yeah,
That's
yeah,
an
yeah. At the end, it's the
exponential.
market that decides it.
It's
Yeah.
an exponential. And it's so decentralized that today I was looking, there's 17,000 active nodes around the world. Here's some big data points. There are 195 countries. So 195 countries, there's 150 central banks, and there's about 20 high performing central banks, like the Federal Reserve, the Bank of England, Bank of
Mm.
Japan. These are very high, sophisticated central banks. But there's 17,000 nodes, and they
Yeah.
work 24/7, not 9 to 5. So all of a sudden, that network is, we don't have to worry about a problem in the Red Sea shipping equipment. We don't have to worry about the Panama Canal shipping hard cargo. You can ship Bitcoin. Now you're going to be able to ship Satoshis all over the world, and I can
Yeah.
attach a JPEG to it. I can attach a piece of art. That network is extremely valuable. And
Plus, it doesn't matter if a node goes down for 2 years, right? Whereas if a central bank shuts down, it's a bit of a problem for 2 years. Anyway, yeah, I see what you mean. I mean, everybody that listens to the content
so we
will
like both.
understand this.
We, we,
Yeah,
we like
yeah.
the
That's.
Bitcoin,
I'm just trying to, I'm just trying to get you
but we also love high
just dig
margin
deeper, I guess.
business.
Yeah. Aydin, what made you choose, just to shift gears here, but what made you choose all Bitmain?
Well,
Why is
we
there
bought from all
no
the big suppliers. I mean,
micro
2 years
BT
ago we had bought,
purchases at all?
I think, over 10,000 Canaans at that time. We have a large fleet of micro BT as well. It's just that lately in the last, again, we're not emotional when we make these purchases. It's all just hash rate economics, right? So what's the best dollar per terahash? What's the efficiency of the machine? We plug it into our matrix, we evaluate it, we do time sensitive analysis, we do just what are the different scenarios. And, Bitmain has been I think serving a lot of the growth lately, because they've been selling machines at prices that are very competitive, right? And at the end of the day, the machines, as long as there's no fundamental issue with the hardware, like where we stayed away from is we've stayed away from experimental upstarts, right? Because we know how challenging it is for to build our own ASIC miner, and we've been approached by some, and that's not to say that they're not good, but we've just tried to. It's a delicate balance when you're doing innovation and you're doing R&D. But you also have a commercial business to run. You can't go too far down the rabbit hole, right? So we just and moreover, we actually have been buying from partners, like broker partners, who have immediate delivery. I probably more so than the brand, Jesse, is ROIC, right? So you could probably guess, if you looked at a bunch of offers in the market, and you seem like a sophisticated guy, you would have an idea what machines we'd be interested, just based on, oh, these ones have the best efficiency, best dollar per terahash. These are available in a few weeks, because you're in all the Telegram channels. I'm sure you see all the offers, right? And again, it's just like, at the end of the day, it has to be accretive. Otherwise, what's the point of the whole game, right? Like, you have to make money for shareholders, right? And even if we're a private company, right? Like, I know guys that have been mining since 2013, 2014, right? And you want to keep some of your hodl in that process, right? Otherwise, you just buy Bitcoin, and like, you just, like, that's what Michael Saylor does.
Yeah, it's less fun.
I come back to what
buying Bitcoin is less fun.
When FTX blew up, there were so many machines for sale. There were so many financial woes. We wrote a check. We bought right at the very bottom and got our money back by May last year. So Bitmain seemed to have the most inventory through these secondary parties, brand new machines, get a coupon with them, get your price down. So we were able to, as Aydin said, get the highest returns on our invested capital when we deployed. And one of the things we've been so reluctant is making a big spend to waiting for the machines a year from now to go and add 10 exahash. We want to make sure that we could plug them in immediately.
Yeah, no, understood. Let's shift gears again, talk about the where you are in the Nordics, in the EU. That's always a very interesting area of the world for mining for me, because risk from a risk perspective, I still feel the US is quite unbeatable on price, but I see a lot of projects pop up in Finland, Norway, and Sweden when it comes to heat reuse and demand response. Talk to me about that a little bit. I know you guys have some stuff going on in Sweden. Are you in Norway and in Finland as well, or not?
We're not in Finland. We've scouted out some assets there. We were in Norway, and that was a bad experience. Went in Norway, and that drama was they then came up with a tax. It was anti-Bitcoin. That was repealed, but it was too late. It just threw off the whole cycle. So in Sweden, we've expanded in the Boden area, so something that's close to drive. But all these areas, they're all just like across the United States. Each state has its own tax issues, has its own regulatory. It becomes very political. You get moratoriums in British Columbia, then you get another one in Manitoba, then you've got one in Quebec, New Brunswick, no new Bitcoin miners. So we got there first. They brought out a tax on all energy after Russia invaded Ukraine. We saw energy prices go around the world for no reason, nothing related to that war. All of a sudden, up went 20% increase in the cost of electricity out of fear. The Swedes became very fearful. They put a tax on because of all data centers. So now there's a pushback by Amazon and Facebook because they have big data centers there. And we found that we run a very sophisticated treasury department, basically, because how we hedge. We hedge in the seasonality of electricity. We hedge out that price. So even with the taxes, it's competitive to what's in the U.S. But you just never know. Each jurisdiction is a moving target because it's been kicked Bitcoin. I had this experience in the gold space. having gold mutual funds and investing in gold mining companies, which led me down the path to Bitcoin, because both are alternative assets and both are decentralized assets. One is tangible, one's not tangible, and but both need electricity to make. So in that sort of that journey, I think that we're going to see that it will improve now with finally a Bitcoin ETF in the U.S. That the attack on Bitcoin by the banks, lobbyists, going to the politicians, and I think a lot of this stuff comes out from the Bank of International Settlements. They'd rather have a rogue country like Venezuela running their paper money through their country, or Zimbabwe, than they would to have Bitcoin. And so you see, they want to control the Bank of International Settlements. It used to be a public company, Jess. They privatize it. It never loses money. It always makes money for its partners. It's a global system. And they've been the most bellicose and against Bitcoin in Europe and pushing that political agenda. And they push it over here. In America, it's two big bank lobbying groups that are pushing it. In Canada, is the same thing. And you have to just deal with it. In Canada, we realize in the summer, there's no fintech business. People approach us to do our AI business. We can't touch you because you're Bitcoin, but we love your AI business. Can we do work with you? Okay, who's your banker? Who's your research analyst? Well, you're going to have to go to New York City. Well, why is that? Well, because the banks in Canada have basically stopped any fintech business from prospering. They don't control it. So I think it's just part of the journey of realizing that there's so many naysayers, like Uber had to deal with, and going through all these cities and the fights they had to do before they changed the dynamics of the cab business. And the other big part about Uber is it's all about private property and democratization. That is, if you have a car, you can all of a sudden make extra money. It's your asset. And that's why Uber cars were cleaner. It's interesting about people take ownership when something's theirs. They take better ownership. Yeah. Same thing with Bitcoin. They own their Bitcoin. They have it in their segregated wallet. They take their arms are more embraced around this private property.
Yeah. Talk to me, Frank, more about, you said you were the first guys that did demand response in Sweden. I want to hear more about that. What made you start doing that?
Is it first to do what? Bitcoin mining?
No, demand response.
Oh, demand response. Oh, balance of the grid. Yes, demand response. It was the peak period. So there's such a big capex to build along this river, another hydro dam to be able to supply the electricity during peak periods. And so it's just a mathematical model that it was better to partner with us and pay us. So when everyone turns on in the winter, their toasters and the heaters in the morning for a shower, there's a surge in energy need that we could turn around and cut back to help them out. And at time. So it was really a financial structure with the utility company paying us every month that we would always be there for them to stand by. So now this electricity before was going nowhere. It was just wasted electricity. We all of a sudden start using it. It creates economics for the community of Bowden. It creates economics for the utility company. They're getting a higher payback on their return on invested capital for building these other dams. And now they don't have to build another one. And it works in harmony. So that was when that took place. Then you saw Riot did the big transaction in Texas.
Does that, Aydin, just to go over the ASIC purchases again, do you factor that into your strategy when you buy machines as well?
Well, we really wanted to make sure our fleet efficiency globally as a company was optimized going into the halving, because the most important thing is to ensure that your unit economics are sound going into the halving. So, for example, people have different target hash prices post-halving, right? So I think, you know what? If you asked me that I was in Amsterdam,
what's yours?
Before we saw all these crazy S21 orders start coming out, I was going to target something around, low 30s, right? And basically, I was sort of thinking a J Pro at 5 cent power would be break even, right? And so that would actually be like a $35 hash price, okay? But with the way that hash rate is skyrocketing, and you kind of have companies that have been doing a lot of financings lately just to purchase more machines, I think that will skew qualitatively the break even prices, or not even the break even prices, but it's just going to bring so much hash rate online so quickly that it's going to exacerbate the downward trend. So, you look at December 2022 when we had the first difficulty drop, not December 2023, but like 13 months ago, December 2022, we had the first difficulty drop in a long time. And, at that point in time, it was about a $55 hash price, right? And we had not seen anything lower than that, even after the last halving and even after COVID in March 12th. So it seemed to be that $55 a petahash a day was a kind of like local minima on a 4-year spectrum. But with all this hash rate coming online, and so then I figured, will probably be, $35 hash price. JPros will be break even at a nickel. But with all these machines coming online, it will be really interesting to see. Although, in the last, I
So
think
have to
that
get a number out of you, Aydin. What do you think? Before you answer, I just looked it up. The Luxor
Luxor
derivatives right
derivatives for May
now
is at
for May
50.
is at
Okay, so that's
50.
that. I would say that's pretty generous. I think we could
Yeah.
see 35 for sure. Maybe worse, but I think 35 because the thing is not all the S21s will have been installed at that time, right? Because a lot of them, most of the orders are shipping top heavy towards April to June. But anyways, coming back on the K Pro purchases, what we wanted to do is we want to get our fleet efficiency down. And this is a very important point I'm going to make right now before I have to jump. Okay, there was incorrect stats put out about Hive suggesting that we had a 38 joule per terahash fleet efficiency globally. Bullshit, number one. Number two, with the advent of our K Pros being plugged in, and they're all going to be plugged in next week, they've all been delivered. We've got all of them. Our fleet efficiency is going to be 29 joules a terahash. That's a big gap, man. And where we were coming down for, we were at 32. Okay. So, there's a lot of, as Frank, says in the markets, people use fear, uncertainty, doubt, FUD about our story, right? And I won't mention the publication, right? But they're very prolific, and with our S21s, once those are all installed, we'll be at 25 joules a terahash fleet efficiency. And I think that's if there's one takeaway from my part of this interview, is I want your viewers to understand that we're extremely calculating, and we've got a very strong track record, and I've got a phenomenal team. Frank and I have a great team. Our CTO has been mining since 2011. So, we've seen the good, the bad, and the ugly. And, we made, everyone was a naysayer after the Ethereum merge. Guess what? We pivoted our GPUs to altcoin mining, right? And we were generating revenues about 75% of what, I'm going to give you a very technical stat because you're a technical guy. We were doing with our GPUs in the wake of the merge. Okay. This is like the worst part of the merge. We were doing 75% of the revenue, an ASIC, like a mid-generation ASIC, like 34, 36 joules a terahash. We're doing 75% of that revenue, $1 per kilowatt hour basis, right after the merge, okay, with our GPUs. People are like, oh, it's going to go to zero. No, bullshit. It's asymptotic. Everybody knows that. If you've got efficient machines and low power, and that applies to GPU economics as well, we survived that. And then you know what happened? Our GPU fleet in various times throughout 2023 started making more than the ASICs because there were altcoin runs. And so,
But look, this is, yeah. No, of course, but look, it's again, it goes back to what I said earlier about longevity and what you want to plan for the long term. If you can do both, and this is often where I feel a lot of the Bitcoin purists butt heads with the mining community, because the mining community is all about how much money can I make per kilowatt hour, right? And it's not about the philosophical aspects about Bitcoin and around money and macroeconomics around the world is for the mining community also important. Otherwise, they wouldn't have started this, right? But especially as a public company, it's important to drive shareholder value. And I like to ask that question often around how much we know we have to get into it now for sake of time. But I often like to ask how much does short-term shareholder value increase butt heads with the philosophical aspects of the longevity around Bitcoin, because we've seen when people try to make money fast in Bitcoin mining and take on a bunch of debt at 12%,
but
and put the machines up
that's
for
not
collateral,
sage.
because
That is
then they have problems,
really short term
right?
focus. Because if you want to validate the network, it's okay if hash rate goes up. Guess what? It becomes more secure. It's okay if there's more mines around the world. Guess what? It becomes more decentralized, right? That's all okay. So in order for us to have a philosophical conversation, we have to have a seat at the table. How do we have a seat at the table? We have to have a sound business. How can we afford to give back to the community and do a greenhouse project in Sweden? We have to have a sound core business. So your core business has to be resilient. How many miners do you know that have gone bankrupt? A lot. Because guess what? Maybe they were a little too philosophical, right? And so you have to be calculating. You have to be, right? It's all math. It's all math and physics and engineering and coding, right? And discipline too.
Yeah.
Right? You can't be asleep at the wheel when you're up.
And it's an innovation as well.
You have to be able.
I mean, you guys.
What's going on? Can you maintain your own transformers, your substations? Like, it's an infrastructure business too, right? It's tradespeople up at 6 a.m. going on site, and if it's snowing or whatever, and dealing with real world issues. So there's the execution and the tactics as well. So we as miners have to do this and execute. So I think it's yeah.
And also innovate. Look what we've done in the shoot, Aydin. We take a 40,000 square foot building and we heat from the machines a 200,000 square foot building with 175 workers making whirlpools in Quebec.
Yeah,
I mean, so we, are an engineering company. But I want to give you a story of my experience, because I'm known in the gold world before I went into this crypto ecosystem. I found that in these gold conferences I would attend, that those people that were the most purist in attacking anything but gold actually own very little gold. They really want to make an anti-government statement, and they look at gold as now it's Bitcoin. So I really sit back and say the Bitcoin purist that's so like a religious fanatic, I don't think they have that much Bitcoin. That's what I think.
But does that matter? Like, it does.
No,
I mean, come on. It doesn't matter how much Bitcoin somebody has. They can still have their opinions, right? Look, 100,000 satoshis in 10 years is going to be a lot of money, I think.
It's a lot of money, but they don't have much, or they don't have any. What I'm trying to share with you is that you can't. I found is catered to the person that has this emotional anti-government. I'm not anti-government. I think that Bitcoin is wonderful for a diversified portfolio. I think it's a perfect alternative asset class like gold is. The largest hedge fund in the world, Ray Dalio, has 10% in gold. Guess what? It's now going to be 2 to 3% in Bitcoin. I think that that's brilliant.
Yeah. And before you have to go, before we round this out, I had one really important question that I wanted to ask was, with all these upgrades, right? What do you guys do with all the older inefficient ASICs? What is your strategy there? And maybe tie that into, before you answer, maybe tie that into diversification. Are you looking at more places?
Yeah, I mean, I think you kind of
maybe even more cheap
inferred an answer to your own question in a good way. So first of all, we always ensure we have the most efficient machines plugged in to our infrastructure that's existing, so we can immediately start cash flow. We've talked about that a lot this interview. Okay. And when you have new machines come in, like, for example, by the way, for your viewers, do your viewers know that the S21 comes with a different type of power connector? So there's going to be a lot of PDU upgrades out there, by the way. And so you have to think about those more granular things. And so you need to make sure that we bought a lot of K Pros because they were plug and play. We didn't have to rewire any PDUs. It was great. It was easy. It was straightforward. Rami loves the K Pro. He's our site captain, and so, but we still have an inventory of less efficient machines. But as you know, ASICs are a commodity as well. So the ASICs have appreciating value, although we don't realize that value in our books due to accounting standards. That's another interview. We should do a whole one on accounting standards in crypto. And so those ASICs have more value in a bull market. So we have, I'm not saying we will, but we have the optionality to realize value by selling them in a bull market, or exactly, they're a proxy for Bitcoin, right?
You're going to store them, right? Like last
Or
time
if we
when we bought
expand in a place. Oh, sorry, go ahead, Frank.
when we bought the shoots, I did that compliment. We bought Lachute and we got 8,000 S9s free with that deal when we bought Lachute, because it was just before the halving, and we inventoried them, and we sold them for $250 a machine. So they were down.
You did the basic strategy.
$10.
The basic strategy,
so
except actually mine with them.
them. So
Yeah,
that's
as well. And so that's the thing. So yeah, you're right. Like Jesse, if you go and if we do find a site with really cheap power, and now we've got a bunch of 34, 38 joule per terahash machines and hash. Like I'll just quickly tell you right now before I have to jump. So right now with Bitcoin at 43,000, difficulty at 73 trillion. A 22 joule per terahash machine does $140 a megawatt hour. 30 joules a terahash is doing $100 a megawatt hour. 34 joules a terahash, $90 a megawatt hour. 38 joules a terahash are still doing $80 a megawatt hour, and that's in USD. So people can still make money if you have 5 or 6 cent power at this exact moment. Obviously, we're in a bit of a rally with 38 joule machines. So as long as I think now people well understand these spectrums of profit. There's always an opportunity to realize additional hash rate. And I think one thing that we haven't really done, but we have over 6 exahash of ASICs in inventory, but we only talk about what's operating. A lot of companies talk about what they have in inventory, and maybe we start doing that. I don't know. But we just talk about what we've got running, how much Bitcoin. We always talk about what we're doing, right? That's.
Have you looked at Africa for those
machines, Aydin? We have an inventory that if we had.
I mean, if we just had more electricity,
6 exahash,
and we're constantly but we only want good sites. Like we don't want. We look at sites all the time. Like if we put out press releases for every site that we passed on, it would just be like a Twitter feed. It'd be like,
yeah. Have you looked at Africa, and would you consider fully hosted models to deploy them?
Dry climates have worked well for us, but that's not to say that other companies haven't found success, in warmer climates. But I have never been to Africa myself. I think it's an interesting jurisdiction, but political stability is also important for us. So I think that's it's like we never looked at Iran or Kazakhstan or places like that. Even though I'm half Turkish, you'd think I could just kidding, but.
Venezuela, 3 cent fully hosted. Let's go. Yeah. Okay, understood. One of the last questions that I wanted to pose to you was whether you guys will always look at diluting stock or debt first before you consider selling some of your hash rate forward. Have you ever considered that, done a deal like that? Where would it make sense in your mind as a publicly listed company to do that if you wanted to raise money?
Well, it's a great question. One is the trade-off for that hash rate, that liquidity, which you're talking about. You said 1 exahash, that becomes a material number. When this was first coming out a year ago, and then last spring, there wasn't any size for that number. But we've been really reluctant to go anything above 8% cost of capital. We have not bought any debt. We got everyone pitching us. We wouldn't take any of that debt. We wouldn't pledge our coins. We've been a very conservative balance sheet. So when we have sold shares in the ATM, it's usually for equipment that we're going to be deploying right away to start getting revenue against it. So we will always look at that. The last financing we did, the bought deal, the cost of capital at that stage for our peers was like 29%. To 30%. If you take a look at the warrants and what they did, and ours was like 23%. No, sorry, it was 15%. And we were upset about that. That cost of capital was 15%. But these other deals you've seen done with a full warrant and the discount they do on the stock price, etc., that cost of capital is much, much higher. So we have to trade that off all the time. The cleanest mechanism has been the ATM, and we never function our ATM on a down day. We don't push the gas pedal. We don't take that big risk of borrowing. We don't take the big risk of just financing for the sake of financing, because we know, and we've done forensic accounting on all of our peers of how they play with games and G&A and professional fees over here and what's in G&A. We know how we run our operating cash flow, and we know that we have the lowest G&A per Bitcoin mined, and we're very proud of that. And the team gets bonuses based on that, and the team gets bonuses on exahash. So that's how we function. Other people can function how they want. It's how we function.
Frank, maybe before we hop off here, something that I still wanted to ask was whether you guys, with the future and AI coming, and as I said earlier, my theory, and maybe you see it the same way, of Bitcoin mining being sort of ever pushed to the fringes, and you need to make more heat reuse work and demand response that we discussed earlier. Do you consider doing smaller sites rather than those big farms to drive economies of scale when it comes to heat reuse and sort of in a distributed way in the Nordics?
Simply as a business, just forget about being Bitcoin only, to compare it to Bitcoin. To get 100 million in revenue, Bitcoin mining, you need about 100 megawatts of electricity. Mm-hmm. That's roughly the number. To do that in HPC, you need 10 megawatts, not 100. So you have a bigger cost. Like I said earlier, the data centers for HPC are 10 million a megawatt, not 500,000 like they spend in Texas. So you have to do this sort of intellectual arbitrage where that highest returns on invested capital is, and where the cash flow is very stable. And that's how we look at the data center business. What we do know, like Core Scientific, when they went through all their troubles, one of the best parts they had is they had assets on their balance sheet. They own data centers. And that is very helpful with the banking world. So one of the things that we started, we're the first to go buy our own land, buy our own facility. And we just did another small purchase. We think when you go HPC, you can go to smaller data centers. You can be very profitable. And you want to be within 200 miles of a high dense area. It's better to be close to a university where there's lots of research and business activity. So we're going to focus on that decentralized mechanism of cities around the world and downtown core. Even if we can't own it, that we'll sublease. And I think that we can build a very substantial, attractive business because it's all decentralized. Like Bitcoin is decentralized, when you put a photograph on Facebook, it's their photograph. It's not yours any longer. You've lost that property right. The concern for a lot of coders is just going to these big service providers that they lose their code. If they go to open chat, do they own that intellectual capital, that musical song or that Mozart they've written? With us, they'll have the separate data, the data storage. So I think that the idea of decentralized mechanism, which we've learned from Bitcoin, is very valuable in building smaller data centers, and they can still be very profitable.
Frank, is there anything that I did not ask you that you wish I had asked?
Well, Aydin is an electrical engineer, and he loves to get into the real granularity of plugs going in and out and joules per second. So I wanted to let you know he's just done a wonderful job of driving our high efficiency. And remember that we're in Sweden. We got to translate everything from Swedish into English. Then we're from Iceland is in Danish, and Quebec is French. Then we have to roll it all up. So we've already been this sort of global company right at the very start. And I think that that's where we want to make sure that we can maintain that global footprint in jurisdictions that we go. But I think you had another question on investing. And I do believe the Bitcoin ETF is going to do what happened to gold stocks and the GLD. I really do think that over time, over the next couple of years, there'll be a separation because all the Bitcoiners trade together as a unit by the minute with Bitcoin. And I think you're going to start seeing a separation of those that run a better business model that don't have the big debt. And that'll be the big difference in the industry, because that's what happened to gold stocks in 2004 on. As for a hedge with the dollar, I think that there's no doubt that digital property rights and digital assets are going to become an important component in a global diversified portfolio. And so that's the reason why I think that the price of Bitcoin can trade substantially higher. It'll go through lots of politics in over the next couple of years, but it will slow. The adoption process is not stopping. The number of cold wallets that have less than one Bitcoin continues to grow, and not just buying the ETF. I think all of that is just going to add to it as a wonderful alternative asset class.
Yeah, you cannot replicate digital scarcity, right? Last question, Frank. Aydin is not with us anymore, so I'll have to ask him this next time. Bitcoin does not consume enough energy. What are your thoughts?
No, I think there's just so much fun with it. When we are 1% of the network, and you think of how much electricity we consume for all the statements done by Greenpeace or is funded by the partners from Ripple, I mean, it's just so much fun out there. And it's just something we have to educate. So what we did at Hive, we took and I think the stewardship and leadership of Michael Saylor is outstanding in creating the Bitcoin Mining Council. We took those 30-minute slide deck presentations and condensed them to 3 minutes. They're on our website, and we put them in Swedish, we put them in French, we put them in English, we put them in Spanish, so that to try to educate and inform people that the consumption of electricity is much, much distorted, and to make an ounce of gold uses a lot more electricity than the crypto mining industry and the 17,000 nodes that are around the world.
Frank, where can people find you guys? Where can they send opportunities if they think they have something interesting for Hive? Where do you want to send them?
Hive Digital. Hive is a very active website on YouTube. We publish regular educational material on our YouTube channel at Hive Digital Technologies. So I highly recommend to go there, sign up and get our press releases, and we write content and we publish on sort of macro views on the crypto ecosystem. So you just sign up at Hive Digital.
Lovely. Thank you. Guys, if you learned something new, please hit a like, hit a follow, leave a subscription. This podcast, if you're listening on audio, is on Swan's Bitcoin channel as well, if you want to check out the video version. Thank you so much, Frank, for hopping on. I know your guys' time is always scarce, so I really highly appreciate your insights and the conversation today. If you want to support the show, anybody that's listening, and you want to try a new innovative way, please look in the show notes and send me some hashes maybe. I will always be happy to receive some of those in my pool. With that being said, guys, thank you very much. See you next time, and yeah.